Hey investors, welcome back to Stoxpot, your go-to episode to unpack what's happening on various stocks, industries and economy. It's me LEKSHMANmj, and today we are diving into one of the most exciting yet challenging sectors in India. Yes, we are going to talk about manufacturing sector. Over the last decade, initiatives like Make in India and production-linked incentive schemes have promised to transform India into a global manufacturing hub. But has this push truly delivered? Despite all efforts, why is manufacturing still less than 20% of India's GDP? And what does the future hold for sunrise sectors like renewable energy, electric vehicles and semiconductors? Stay tuned as we explore every nook and corner of the story. Now let's get started with the bigger picture. India's manufacturing sector is at a critical juncture. For decades, the focus was on services and consumption-led businesses because they generated high profits and valuations. But now, things are changing. Global companies are looking to diversify their supply chains due to geopolitical shifts. And because India offers geopolitical neutrality, a large labor force, reasonable cost, and a long-term alignment with global supply chain strategies, India has now emerged as an attractive location. Now looking at PLI schemes launched under Atmanirbhar Bharat initiative, it has played a key role in shifting the mindset. These schemes incentivize companies to manufacture in India by offering financial benefits. Though not all, a significant portion of planned investments have materialized. For example, in sectors like auto components, India's share of imports has decreased while exports have increased. This is a positive trend, but it has not yet moved the needle significantly in terms of manufacturing share in GDP. Currently, it stands at 17 to 19%, which is far behind from China's 26% and South Korea's 28%. So why hasn't manufacturing grown faster? One reason is cost competitiveness. To compete globally, India needs to address high logistic, power and land costs. Logistic costs, for instance, are much higher than the global average. New ports and infrastructure are being built, which should help reduce these costs over time, but progress is slow. Similarly, power cost remains high, and land policies vary from state to state. So digitizing land records and creating a national land code could solve some issues, but this is still a work in progress. Next, labor reforms are another area that requires attention. Modern manufacturing demands skilled labor, and policies need to align with these demands. It's not just about being a low-cost manufacturing hub anymore. India must invest in research and development, innovation, and quality to position itself as a leader in high-value manufacturing. Now let's talk about specific sectors. Auto components and broader automotive ecosystems are showing progress. India used to run a trade deficit in this sector, but now we have transitioned to its surplus. Many components made in India are globally recognized and are boosting our export share. However, much of the manufacturing still happens at assembly level. For example, in electronics like iPhones, we assemble end products but rely on imports for critical sub-components. To truly add value, India needs to produce these sub-components locally. But this requires active participation from MSMEs. While funding for MSMEs is improving through banks and new age NBFCs, credit penetration is still low. So addressing this gap will be crucial. So having said that, now let's look into the sunrise sectors like renewable energy, green hydrogen and EV batteries. Here the picture is mixed. In solar energy, India was fully dependent on imports for panels and modules just a few years ago. But now, thanks to recent policy changes, we have built sufficient module manufacturing capacity and many companies are exploring cell manufacturing. This could eventually become more cost-effective than importing, though challenges like high power costs remain. In wind energy ecosystem, established players are already contributing. The battery ecosystem is still in its early stages. But one company has set up large-scale lithium-ion batteries production and others are exploring component manufacturing. Interestingly, incentives like PLI schemes are not the only reason for the companies to invest. Businesses aim to create long-term economic value, generate jobs, and establish a strong market position. So incentives simply just make the business case more attractive. For example, Exide set up a lithium-ion battery plant even without PLI approval because they saw long-term potential. So looking ahead, India has immense potential to grow its manufacturing sector. If the country wants to achieve its ambitious goal of becoming a $30 trillion economy by 2047, manufacturing must play a bigger role. This won't happen overnight. Instead, it will require Hard work across multiple fronts like cost competitiveness, R&D investments, labor reforms, and building a robust value chain ecosystem. So sectors like renewable energy and EV batteries are promising, but progress depends on addressing the gaps. So that's it for today's episode of Stoxpot. We have covered the challenges, opportunities, and future outlook for India's manufacturing sector. So what do you think? Is India poised to lead in global manufacturing, or is there still a long way to go? Share your thoughts in the comments down. And if you find this episode insightful, make sure you follow and share this with your friends. So until next time, stay curious, keep exploring the world of opportunities. It's me, LEKSHMANmj, signing off.